Tidjane Thiam, thank you so much for speaking to Bloomberg.
Good morning, Francine. Thanks for having me.
And good morning. Talk to me a little bit about net new assets. They're increasing. How much more can you expect?
Well, this was a very good quarter for Credit Suisse. You saw 1.3 billion of profit. You saw positive net new assets, which is very important for us, at 23.5 billion. If you add the asset management, which is another 17 billion, we're actually at 40 billion in the first half. That's the size of a medium-sized bank that we've added to the bank every 6 months. Look, very much focused on ultra-high net worth. More than 60% of our flows come from our ultra-high net worth, and that's the heart of the strategy, really to bring institutional-like advice and services to ultra-high net worth clients. So IBCM and global market work very closely and increasingly so with wealth management to provide services to our clients. And within that, you know, we've created this platform, ITS, which is the joint venture between the wealth management and the investment bank. Well, it's up 17%. So 11% in the first quarter, 25% in the second, so accelerating. That's a really bright spot for us.
If there is a strong market downturn, what happens to net new assets?
I mean, you can have outflows, but what happens more importantly is our revenue shifts between lines. Okay? So you're going to see us make much more money from derivatives, structured products, which is what you see today. It's a little bit in global market. You see that APAC markets had an amazing recovery. A lot of that is structured products. We had a 90 million profit when we had a loss last year. So it's a big swing. So, yeah, it's the nature of what we do. We may lend a little less, so a little less net interest income, okay, but more recurring fee, recurring income, and also transaction income.
How much do you worry about the market? So you have trade tensions, you have a possible government shutdown, you have equity valuations that are pretty stretched. Look,
the beauty of a strategy we've adopted, and that's one of the bright spots again in the numbers today. When we started 3 years ago, markets trading were 59% of our profits. In these results, it's 19%. So moving from A to B was absolutely key because today we look at markets and trading as an upside. Right. Okay, the core of our performance is driven by the wealth management, which is actually much more stable and much more predictable and growing very nicely. And we can then absorb the volatility of global markets. What actually I tell our markets team when I go to New York elsewhere is that it's good to be at Credit Suisse because here they can grow. When I say ITS has grown 17%, that's good for trading activity to be able to grow 17%. And they can grow this much because they support the wealth management. Another important point in the results is really the SRU. It was our restructuring unit. We have hit now our end of 18 targets. We said we'd close it down when we had 11 billion of RWA and 40 billion of leverage. We are now at 10 of RWA and 39 of leverage. So for me, that's almost the most pleasing thing in these results. We're done with the restructuring. There's a lot of skepticism whether we could get to that point at the end of the year. We're early, and we have hit the point where actually the SRU now is so small that it's going to stop weighing on our results. And financially, that's very important. This 1.3 billion has a lot of upside. This is what really we want people to understand. It contains more than 300 million of losses in the SRU. And those losses in 19 will be gone. So if we continue to grow net new assets, which drives our revenue, revenue is up 7%. Very few banks grow revenue. Revenue is up 7%, cost is down 5%. So that positive operating leverage, it's the 7th quarter in a row that we have positive jaws.
And this is a trend, right?
It's a trend. But doing that quarter after quarter is very powerful. We've now added more than 4 billion of profit cumulatively by every quarter, raising revenue, reducing costs. So you've got the growth in wealth management, the operating leverage, the shrinkage of the SRU. Yeah. All that is going to add to our profits. Also, keep in mind that the SRU cost us a lot in funding. Once it shrunk, all that funding, is not necessary anymore. So there's a lot of upside here.
What about global markets? Where do you see those at
global
the end of
markets? Really, thank you for asking me about it because it's a really part of the strategy we need to explain better. People compare us to others. We don't think that's right because our global market strategy is not to maximize the standalone global market revenue. It's to use global market to power the other divisions. So what you see this quarter is that revenue is down 8%, but that's because we keep them under a strict cap in terms of RWA and in terms of leverage. We could chase revenue, and pour much more capital in that activity, and then you would see results more similar to those of our peers. But we have taken a different path, which is to use global market to serve our clients. And actually, that's working very well. So that discipline allows us to... We made a profit. Business did 206 million of profit. But more importantly, it generated a lot of activity in IWM, International Wealth Management, and the Swiss Universal Bank, that would not be there without GM. And that kind of hidden contribution of GM is embedded in the outperformance that you see in Sub. Sub had its best quarter since 2013, the Swiss bank. IWM has its best quarter since it was created. IBCM has its best quarter since 2014. So we're now going back in time to 13, 14 to find comparables to the performance we're having now, and that's because all that is working very well together.
So in IWM, you wouldn't see, for example, the need to change the structure, maybe integrate some of the wealth units?
At this point, we have brought global. We've created a kind of joint venture between global market and IWM, which we call ITS, and that's working extremely well. As I said, up 25% year on year in this quarter.
Asset management, do you need scale to counter the passive investments? Do you need more scale?
We're very happy with the asset management. It's really 180 million of profit. Profits are up 25% year on year. It's kind of one of the untold stories in all this. We have flipped it. Our asset management, when I arrived, was focused on serving institutionals, and we have inverted those proportions. They are now primarily serving our wealth management franchise. So when they create a new product, we will typically raise 1 billion or 2 billion, selling it to ultra-high net worth clients. That's a very good and a very profitable business, and it's driving a recurring income, which is really high-quality revenue. And you can see in asset management, recurring income is up more than 20%. So really very pleasing. The cost performance, the cost discipline is still there. And I really want to say something there too, because we listen to the market and we hear a lot of comments on the fact that we're hitting our cost target by not investing. Nothing could be further from the truth. Okay, it's just that we understand the difference between gross and net. And when I set the net targets, I set gross targets that make room for investment. Okay, we're investing more than 1 billion every year. So it's not because we are saving cost that we stopped investing. You see costs are down 7% in Switzerland, which is more than expected. A lot of that is thanks to the digitization, which we have done, which saves a lot of general and administrative expenses. So we have a new system, single client view with Palantir, which is state of the art. We have absolutely one of the best systems in the banking industry to follow our clients and understand them. So that didn't happen by itself. This is because we've invested. So it was a point on which we're a bit sensitive when we keep hearing that we are achieving our cost targets by not investing. That is simply not true.
Can you update us on sharing costs maybe with other investment banks?
This is something we first of all, we do it internally. One of the key concepts behind our cost savings is separating the back and the front, so that in the back we can create utilities. So we work very much internally to have as many utilities and share costs as much as possible. So working with others is just an extension of that idea. It is not a new idea, but it's difficult. I think we've been clear about that. Desirable, but hard to achieve. So there's been a dialogue. I think it's now a public secret, but we've talked to UBS about that. The teams are working very hard, but for the time being, there's nothing specific to announce.
What do you see as the biggest risk to your business in the second half of the year?
I think we just need to keep the discipline. We've done 10 quarters out of 12. People internally are tired of hearing me saying that potentially we are our own worst enemies. So it's really staying disciplined, staying focused. When we talk to investors, that's the first thing they're asking from us. They're not asking us to change the plan. They just say, please deliver, continue to deliver. We like it. So staying focused. By the end of this year, we will have really completed the restructuring. The SRU is already at target. And then, I've already said, in Credit Suisse, there's a fantastic franchise. Frankly, that's why I took this job. Okay? We spent 3 years cleaning it up and allowing that franchise to emerge. So running that is going to be a lot of fun. And I love the clients. Friday, I was with one of our billionaire Chinese clients who came to Zurich to visit. And we're very ambitious for our clients. We want to help them succeed.
Do you see mergers in the investment banking landscape in Europe?
I know people talk about it a lot. I've always been a great believer in organic growth. When you do 23.5 billion of NNA, 40 billion of NNA total in a quarter, an acquisition has to be very, very attractive to be justified. So we are lucky enough to be in a sector of financial services that has a lot of growth.
Yeah.
So we don't need to look for growth by acquisition.
On Brexit, how do you adjust your risk if we have no deal in March of next year?
Well, our scenario is, we had to submit a scenario for hard Brexit. So the scenario we presented is centered around Madrid. It's a place where we've been doing very well. It has, we were designated best bank in Latin America. So we're doing very well in Latin America, and the connection there is obvious. So it makes sense from a lot of perspectives. We've had great reception there from the authorities. I went there with the chairman, and
so this would be to move more than the 50 jobs that
no,
were
it's just
reported
the 50
yesterday?
jobs we're talking about.
But are you cutting your exposure to the UK?
Well, we've always said the UK would remain very important. So we're talking about transfers at the margin. So we'll keep the UK. We're developing Madrid, but anyway, the end state will be a combination. We've also always said there's not going to be a big announcement from Credit Suisse saying we're going to CTA. There will be a combination of Paris, Luxembourg, where we already have a big platform in the EU, Paris, where we already operate, Dublin, Frankfurt, Madrid. And given recent events, it looks like having a diversified approach is not a bad idea.
About the harassment review that Credit Suisse is undergoing, what's the progress there?
Look, it's as I said, we take that very seriously. We've built a whole investigation team. These are old events, 2010. So a lot of the time has been spent actually locating many of our protagonists. Most, if not all of them, have already left the bank. So we had to find them. Then we had to convince them to be interviewed, and that took a while. So we are towards the end of that process. And of course, but in those things, you have to find a trade-off between speed and also exhaustiveness, accuracy, and fairness. So we have to go fast, but we also have to make sure that every individual involved is treated fairly, and that takes a bit of time. So as soon as we have a conclusion, we will mention it. But you probably saw us announce the appointment of an ombudswoman, Antoinette Pochou, because in those matters, what you want to achieve is that things are escalated very quickly. And having a person dedicated, very senior, very well regarded in the bank, we think is a good idea.
So is that what Credit Suisse can do better? It's basically, escalating quicker.
We already have processes for that. We have a conduct and ethics board, but it seemed to us that having a dedicated, explicit locus where people can go was necessary, because you also want people. These are very difficult decisions. It's very difficult for people to come forward, so they have to feel safe. And that's what we're trying to achieve.
Tidjane Thiam, thank you so much for your time.
Thank you, Francine.